Reddit just reported what I think is one of the cleaner quarters you're going to see from a high-growth internet company. And I don't mean clean in the sense that every risk disappeared. That's definitely not the case. The stock is still expensive, expectations are high, and there are real questions around AI search, user engagement, and whether Reddit can keep improving monetization without damaging the thing that makes Reddit valuable in the first place. But the actual quarter? Pretty impressive. Revenue grew 69% year over year to $663.4 million. Advertising revenue grew 74%. Net income came in at $204 million. Adjusted EBITDA margin hit 40.1%. Free cash flow margin was almost 47%. That is not normal for a company still growing this fast. So in this video, I want to walk through what happened with Reddit, why the market reacted positively, what investors may still be underestimating, and where I think the opportunity and risks sit over the next 5 years. And before we get into it, like the video, comment below with your take on Reddit stock, and subscribe if you want more stock breakdowns like this. Here's the deal. Reddit is no longer just this interesting post-IPO internet story where investors are hoping that maybe, eventually, the company figures out how to monetize its massive audience. That debate has changed. The real question now is different. Can Reddit sustain this level of growth and profitability long enough to justify a premium valuation? Because based on this quarter, the business is clearly working. Reddit's daily active unique users grew 17% to 126.8 million. Weekly active unique users grew 23% to 493.1 million. So the platform is still expanding, and the weekly reach is huge. But the more interesting part is not just user growth, it's monetization. Global average revenue per user grew 44% to $5.23. That means Reddit is not simply growing because more people are showing up. It is getting much better at turning usage into revenue. That is a big shift. For years, Reddit had the audience, the culture, the search relevance, and the high-intent conversations. People went there to research products, troubleshoot problems, compare options, and get brutally honest opinions from real users. But as a business, Reddit historically under-monetized that attention. Now look at this quarter. Ad revenue was $625 million, up 74% year over year. That is the core story. Reddit is becoming a much more serious advertising platform, and this is where it gets interesting. Management said the strength was broad across the ad funnel and across its top 15 industry verticals. So this was not just one category having a great quarter, it suggests advertisers are finding more ways to use Reddit, from awareness to performance marketing. That matters because if Reddit stays mostly a brand advertising platform, the upside is still meaningful, but more limited. If Reddit can become a real lower funnel platform where advertisers can actually measure conversions, optimize campaigns, and sell products, the monetization ceiling gets much higher. That's why Reddit Max and dynamic product ads are worth paying attention to. Reddit said Reddit Max advertisers saw 17% lower cost per acquisition and more than 25% more conversions in split tests. Dynamic product ads saw a 91% year-over-year improvement in return on ad spend from signal and machine learning investments. Those are not small numbers. And then you add the Shopify integration, which is designed to make it easier for advertisers to set up catalogs and pixels for dynamic product ads. That could help Reddit reach more small and mid-sized advertisers, especially merchants that already live inside the Shopify ecosystem. Now is Reddit suddenly meta? No, let's not get carried away. But the direction is important. Reddit is moving from we have valuable conversations to we can turn those conversations into measurable advertising outcomes. That is a much stronger business. The financials show the same thing. Gross margin was 91.5%. Adjusted EBITDA was $266 million, up 131%. Free cash flow was $311.2 million, up 146%. Revenue grew fast, but profit and cash flow grew much faster. That's operating leverage. And in plain English, it means the business does not need to spend $1 extra for every extra dollar of revenue. A lot of the new revenue drops down into profit and cash flow. Reddit's capex was only $1.1 million, basically tiny compared with the revenue base. So operating cash flow almost fully converted into free cash flow. That is why this quarter changes the conversation. A lot of fast-growing companies can show revenue growth. Fewer can show revenue growth, GAAP profitability, high EBITDA margins, and massive free cash flow at the same time. Reddit did all of that in Q1. The balance sheet is also very strong. Reddit ended the quarter with $2.77 billion of cash and marketable securities, compared with only $304.6 million of total liabilities. So this is not a company that needs capital. It has strategic flexibility. And dilution, which is always something I watch closely with newer tech companies, looked controlled. Fully diluted shares were 206.4 million, up only 0.2% year-over-year. Stock-based compensation and related taxes fell 27% year-over-year, and SBC improved to roughly 12% of revenue. That's important, because sometimes investors look at adjusted profitability and ignore dilution. But in Reddit's case, the share count discipline makes the profitability story more believable. Now, the stock moved up after earnings, and I understand why the market reacted that way. Reddit beat revenue expectations by a wide margin. It also beat EPS expectations by a wide margin. Actual diluted EPS was $1.01, compared with analyst expectations cited around 57 cents to 62 cents. Then guidance came in strong too. For Q2, Reddit guided revenue to $715 million to $725 million, and adjusted EBITDA to $285 million to $295 million. So the market did not just reward a good Q1, it rewarded the idea that the momentum may continue into Q2. That distinction matters. A one-quarter beat can be noise. A strong quarter plus a strong guide starts to look more like a trend, but I would not call this risk-free. The first thing I would watch is user frequency. Reddit has massive weekly reach, almost 500 million weekly active unique users, but daily users are much lower at 126.8 million. Management has acknowledged that Reddit still needs to improve frequency and move closer to the daily usage levels of larger social platforms. That's a major opportunity, but it is also a challenge. If Reddit can turn more weekly users into daily users, the platform becomes more valuable for advertisers. More daily engagement means more impressions, better data, better ad targeting, and more habit formation. But if Reddit remains something people visit occasionally when they need answers, rather than something they use every day, that could limit the long-term ceiling. The second risk is AI search. This is probably the part that deserves the most attention. Reddit's value comes from authentic human conversation. Management argues that this becomes more valuable in an internet filled with AI-generated content, and I think that argument makes sense. If the web becomes flooded with generic AI answers, people may value real human experience even more. When I'm researching a product, I don't just want a polished article. I want to know what real people are saying after actually using it. That is Reddit's advantage. But there is another side to this. If AI search tools summarize Reddit content and users no longer need to click through to Reddit itself, that could hurt traffic and engagement over time. So AI is both an opportunity and a threat. Reddit may become more valuable as a source of trusted human data, or it may lose some direct visits if AI tools sit between users and the platform. That tension is not resolved yet. The third risk is platform quality. Reddit's moat is not exactly like Meta's social graph or Google's search distribution. Reddit's moat is community depth, long-tail conversations, authenticity, topic-level intent, and cultural relevance. That's powerful, but it's also delicate. If Reddit becomes too commercial, too bot-filled, too spammy, or too low quality, the whole thing weakens. The value of Reddit depends on people believing the conversations are real and useful. So yes, monetization is great, but over-monetization could become a problem if it damages trust. Then there's international. International revenue grew 76%, faster than US revenue growth of 67%. International daily users grew 26%, compared with 7% in the US. That's very encouraging. But international ARPU is still only $2.02, compared with $9.63 in the US. That gap is huge, and to me, that's one of the biggest long-term opportunities in the stock. If Reddit can localize content, improve translation, build advertiser coverage, and increase monetization outside the US, international could be a major growth driver for years. The challenge is that international monetization is never automatic. It takes product work, sales coverage, cultural relevance, and advertiser adoption. The gap shows opportunity, but it also shows how much execution is still required. Now let's talk valuation, because this is where the story gets less clean. At a share price of around $141.67, Reddit had a market cap of about $28.7 billion. Backing out the cash and marketable securities, enterprise value was roughly $25.9 billion. Using trailing 12-month revenue of about $2.47 billion, the stock trades around 10.5 times enterprise value to revenue. That is expensive, there is no way around it, but revenue multiple alone does not tell the whole story, because Reddit is already highly cash generative. Using roughly $876 million of trailing operating cash flow, and with capex being minimal, the stock trades around 30 times trailing free cash flow. That is still not cheap, but it is much more reasonable than the revenue multiple might suggest. So how would I frame it? Reddit is not a bargain bin stock. This is not a low expectations turnaround where the market is asleep. The market is already pricing in a lot: continued ad growth, ARPU expansion, international monetization, strong margins, controlled dilution, and no major damage from AI search. Those are ambitious assumptions, but after this quarter, they are not crazy assumptions. My read is that Reddit looks fairly valued to modestly undervalued for a high-risk, high-growth investor, but probably too expensive for someone who wants a large margin of safety. The 5-year setup is where things get more interesting. In a base case, if Reddit grows revenue to about $8.5 billion by 2031, reaches a 32% normalized free cash flow margin, and the market values it at 25 times free cash flow, the implied share price would be around $318, compared with $141.67 today. That would be roughly 124% upside over 5 years. That's a strong return. In a bull case, if Reddit becomes a much larger global platform, revenue reaches $12 billion, free cash flow margin gets to 38%, and the market pays 30 times free cash flow. The stock could be worth around $614 per share. That would be roughly 333% upside. That's the dream scenario. But the bear case is very real too. If growth slows, AI search hurts traffic, advertisers like the platform but do not treat it as essential, and margins compress as Reddit invests more heavily, the stock could be worth around $88 per share. That would be about 38% downside from the current price. And what I like about that bear case is that it is not some disaster scenario. It is not Reddit collapsing. It is Reddit being a decent business, just not the breakout platform investors are paying for. That's the danger with premium growth stocks. The company can keep improving, and the stock can still disappoint if expectations were too high. So where do I land? I think Reddit's thesis clearly improved this quarter. The business is growing fast, the ad platform is getting better, profitability is scaling. Free cash flow is excellent, the balance sheet is clean, dilution is controlled, international is early. Lower funnel ads could become a bigger driver, and Reddit's archive of human conversations may become more valuable in an AI-heavy internet. That is a compelling setup. But I would also be careful about treating one great quarter as proof that every long-term question is answered. User frequency still needs improvement. AI search remains a real unknown. Platform authenticity has to be protected, and the valuation leaves less room for disappointment. So my final view is bullish, but with a high-risk label for investors with a 5-year mindset who can handle volatility, Reddit looks like a genuine high-risk, high-reward opportunity. The upside is meaningful if the company executes. The downside is also meaningful if growth normalizes faster than expected. This is not a stock I would evaluate only on next quarter's EPS. I'd watch the bigger indicators: ad revenue growth, ARPU, daily user growth, international monetization, free cash flow quality, and whether Reddit can keep the platform authentic while scaling the business, because that's the whole story. Reddit is trying to prove that one of the internet's most unique communities can also become one of its most profitable advertising platforms. After this quarter, that argument looks a lot stronger. If you enjoyed this breakdown, hit the like button, subscribe for more stock analysis, and comment below. Are you bullish on Reddit over the next 5 years, or is the valuation already pricing in too much?